Do you know that the time frame you choose in trading could determine whether you succeed or fail? Most of traders blow account not because they don't know how to analyze, but because they are trading on the wrong time frame. Today, I'm going to break this down for you step by step so that you will never be confused about which time frame to trade again. If you are watching me for the first time, I'm the person of Kintech, aka the Rising Star. I am the CEO of Show Me the Way FX Academy. Without any further ado, let's dive into the video. Okay, first of all, what is time frame? Time frame simply means that how much data or information each candle represents on your chart. For instance, if you are on the 1 minute time frame, what this means is that each and every candlestick on this particular time frame represents 1 minute's price movement. If you are on the M15 time frame, it means that each and every single candlestick represents 15 minutes price movement. Now, here is something you must understand. The lower the time frame, the more false and fake signals you will see. The higher the time frame, the bigger picture and the clearer view of the market you have again. This is the reason why beginners who jump into the 1 minute or 5 minutes time frame most often get frustrated. They think forex is manipulation, but the truth is they are just trading in the middle of the noise. The thing is, we have different categories of traders and the time frame each and every trading style associated with. I'm going to be breaking this down step by step, the category of traders that we have and their respective time frames. So, first, we have scalpers. Scalpers are traders that come into the market, look for quick movements and smaller gains out of the market. For scalpers, they just need something like 10 pips price movement, 5 pips price movement, and 15 pips price movement. So, for that matter, they don't stay long in the market. They don't hold their trades for so long. So, they always find themselves on the smaller time frame, like the 1 minute to the 15 minutes. You understand? So, you must understand yourself. You must know yourself which type of trading style or category that you fall into. You understand? The advantage about scalping is that you get quicker results. You also get fast movement of the market. But if you are someone who is impatient, you can't control this thing, the quick losses or early losses, please, scalping is not for you. Run away from scalping. You understand? The objective of scalping is that they get quick profit from small movements. And another advantage of scalping is that they get many setups per day. They trade more setups in a trading day. If you are someone who is impatient, love fast action, can handle stress, then scalping may fit your personality. The next one we have to talk about is day trading. Day trading simply means that holding your trades within a given trading day. As a day trader, you don't carry your trades to the next trading day. You understand? So the most suitable time frames for day trading start from 30 minutes to 1 hour, or from 15 minutes to the 1 hour. That is what the intraday time frames. You understand? One advantage about day trading is that it's more reliable than scalping. And if you are a trader who doesn't want to hold your trades overnight, day trading may suit your personality. You understand? Now, let's talk about swing traders. Swing traders hold their trades for a number of days and weeks. So therefore, they catch bigger moves in the market. And the most suitable time frame for swing traders begin from the H4 time frame to the daily and the weekly time frame. So one advantage about swing trading is that you catch bigger moves in the market, less noise in the market, and you take less trades. And the lesser you trade, the lesser you lose much in the market. One disadvantage of swing trading is that it requires more patience. You must be patient enough to wait for setups. Sometimes you can wait for a setup for at least a day or two or even three before it could come to your point of interest. So you must be very patient to wait for setups to come to your point of interest as a swing trader. The last one is position traders. Position traders we call them what? Long-term investors. They don't come into the currency market or the trading industry for quicker gains or quicker profits. You understand? They are what? Investors. They can hold their trades for about years, for about months, even what? Possible years. You understand? So the best time frame for position traders is the weekly and the monthly time frame, because they can hold for months and even possible for years. One disadvantage about this thing is that as a position trader, you need what? Huge capital to hold trades for months and even what? Years. So you need huge capital. Now that we understand the type of trading styles that we have, or the category of traders that we have, now let me give you the golden rule. The golden rule says that the higher the time frame, the stronger the signal. The higher the time frame, the stronger the signal. Now, if you see a breakout on the 5 minutes chart, it might be a fake movement. But if you see a breakout on the H4 time frame or the daily time frame, that is the real money. You understand? So this is the reason why professional traders always use the higher time frame for confirmations. So smart traders check the higher time frame for trend identification, and then scale back to the lower time frame for what? Possible entries. You understand? So this is what we call multiple time frame analysis, viewing the market in the different time frame perspective so that you can know what is actually happening in the market. For instance, coming to the daily time frame or the H4 time frame to identify the trend of the market, scaling back to H4 time frame or H1 for structure confirmation or for setup confirmation, and you then come to the 15 minutes time frame for entries. So here is the truth. There's no single best time frame for trading as a trader. The best time frame is a time frame that matches your psychology, your trading style, and your strategy. So here's the thing. Ask yourself, do I want fast money or quick profit? Am I patient enough to hold trades, to wait for trades to come to my point of interest? These are the questions that you have to ask yourself. If you are impatient and emotional trader, trust me, the lower time frames will break you. But if you are calm and confident enough, the bigger time frame will reward you. So don't just copy traders blindly. Choose a trading style that fits your personality, your psychology, and your strategy. Here is my recommendation for beginner traders. If you are a beginner trader, my advice is stick to the higher time frame, the H4 and the daily time frame candles. You understand? When you master this time frame and you are now confident enough in yourself, you can scale back to the intraday time frames or the current time frames. At that moment, you now have experience with the market. When you start on the lower time frame without much discipline, trust me, you are just going to be donating your money as charity to your broker. And this is what you don't have to do as a beginner trader or as a trader. We are here to make money, but not to give money out. The best time frame is you, the trader. You must understand who you are and the kind of time frame that will fit your personality or your trading strategy. Forex is not just about charts, it's about psychology. So the time frame you choose must match your patience, your lifestyle, and your mindset. If you want stability, go higher. If you want fast or quick actions, then stick to the lower time frames. With what? Discipline. With discipline. With discipline. That is the only way you can stay long in the forex market. If this breakdown opened your eyes, please don't just keep it to yourself. Share it with another trader who is also having what? Time frame confusion, so that he can also understand and choose a better time frame that fits his personality. And if you want me to mentor you step by step on how to master your own trading style, join me inside Show Me The Way FX Academy as we teach you everything you need to understand as a beginner trader or a struggling trader. At Show Me The Way FX Academy, you don't just trade, but we trade what? Smarter. And if you are watching me for the first time, or if you are not part of our community, please check under the description of the video. You will get our Telegram link. You will join us. You can also follow me on all social media handles. And don't forget to click on the subscription button, turn on the bell notification icon, so whenever you have a beautiful content like this one, you will never be left out. Until you see me again, I'm out.